been getting this question a lot on the live stream. What EMA do I have on the chart? So if you bought the course, you already know. You know about the EMAs, the indicators, all the setups and everything that I use. We break it all down in the $199 course. But I want to put this out there just because it's not rocket science. It's not like some crazy, hard to find indicator. Basically, what we have on the chart right here is a 21 EMA. The reason that I use the EMA is because the exponential moving average is a little quicker and it follows the price action a little better than a normal moving average because of the way that it's calculated. So we're using the EMA, exponential moving average. This is a 2-minute chart. We're looking at the 2-minute chart. Depending on what time frame you're looking at, you might want to change up the EMA. If you're trading on a 1 minute, a 5 minute, a 10 minute, vice versa, you got to kind of change it up a little bit. Right now, we're looking at the 21 EMA, which is actually a pretty slow EMA when it comes to the smaller time frames. But what I found is it allows me to avoid some of the chop. It allows me to avoid getting in at the wrong time based on the larger moving average, the larger EMA. So, for example, what I really like about this is it stops me from doing two things. It stops me from getting short when we're really far away from the moving average. So let's say getting short down here. Am I going to short down here when the moving average is up here? Probably not, because why? I know that the market loves to kind of move back to that moving average before making a move down or up and vice versa. So it kind of just stops me from getting that FOMO, because if I'm sitting here, I'm looking more for the opportunity of a long, right? I'm looking more, right, hey, worst kind of worst. I get long down here, and then we ride it back to the EMA, and then we take that move down. So it's stopping me from FOMOing into trades because I know that there's a very, very good chance before we make the next leg down, before we make that next move down, that we're going to retest up into this moving average before moving down. So that allows me to kind of avoid some of the trials and tribulations of FOMO and greed. Another example here. Do I want to get long? Do I want to get long when we just broke out? We're all right. Got all this space. Got all this space. I don't know if you can see it perfectly there on the video, but we got all this space, right? There's this space. That moving average, the price action is all the way up there. So I'm like, okay, I'm going to wait for a pullback to the moving average, and then maybe I get my move up. If we don't get the move up, well, obviously the overall market was bearish on this move down. The trend was moving down, so we were trading that, and we're definitely not going to get long when we're that far off of the moving average. Again, look what we got. We got this pop up there off of the moving average. No reason to get long, because why? Guess what? We pull back to the moving average before moving higher. So again, it happens here. It happens here in terms of dipping down. It dips around, chops around, and then you can see once we started trending, end of day there on Friday, we started trending. Look at how beautifully we kept kind of just holding there on a good trend. If you're getting into a trade, it's trending, it's holding the 21 EMA. There's a very, very good chance that it's kind of ride that EMA and is kind of keep pushing up there, and that's exactly what it did. So from the 130s up there to the 240s for about a 100-point move there, just riding that EMA there. And again, kind of helping me avoid FOMO, because I'm like, okay, there's a very good chance that we kind of bull flag here, and then we push up through that 21 EMA there on that move or bounce off that. So it's not rocket science. I'm not going to sit here and tell you that, hey, this is going to be the end-all, be-all. You can change your whole entire trading experience based on having an indicator on your chart. But what I do think it does allow me to do as a trader with the EMA is it just kind of forces me to be like, hey, am I going to get long up here when we're about 100 points? We're about 100 points off of that EMA. I'm like, that's a very, very probably not the best spot to get long at when we're that far away from the moving average, because there's a good chance that we're going to pull back, right? We get that big move up, and guess what? We pull right back down there to that moving average again, so it helps me avoid the FOMO, helps me avoid the greed, because I'm like, oh, it's going to keep going higher, it's going to keep going higher. No. Hold on a second, my friends. Hold on a second. There's a better chance the market's going to pull back than go higher. Now, when I say chance, that's right. I mean chance, because we don't know if the market's going to pull back, but we know that the market loves to kind of have an average. Moving average is a reason it's called a moving average. The market moves kind of on this average. When we get overextended, when we get that big move up, there's a very good chance that we move back. And again, chances, right? We're trading with statistics, with data, with chances, and vice versa. The idea here is, what is the chance that we go higher from here? Like, how much higher are we going to go before pulling back? At a certain point, we're going to pull back. Now, does that mean we can't go higher? No. That does not mean that. But what this is trying to do is it's trying to help me avoid taking a long up here when the chances of pulling back, I would say, are 60, 70% chance of a pullback compared to a 100% chance move up, right? There's just like, what is the chance we're going to move up? Much smaller than the chance that we're going to pull back into that moving average there. And well, that's what I want to avoid. I want to avoid getting long at the top, and I want to avoid getting short at the bottom. That's the end-all, be-all right there of trading, my friends. It don't matter what kind of strategy you got. If you trade ICT, if you trade Patrick Wieland, whatever. There's no strategy better than just the simple idea of buying low, selling high. And another little tidbit, right? Another little tidbit for anybody out there. If you're looking for a long, you're looking for a move up, well, what has to happen, right? We basically have to break out. We need some type of kind of momentum to trigger that move up. So we're looking for these flags. This is all talked about in the course. It's 199. I know I keep saying it, but honestly, there is so much information in the course. There's over 6 hours of videos breaking down everything that I've learned over the last 8 years of trading. It's going to really get you up to speed with all of these different terms and ideas and focuses. We talk about the mental, the emotional. We talk about, trading prop firms, how to maximize profits, how to hold your winners, how to get stopped out, all that fun stuff. It's all in the course. But again, just wanted to put this out here for everybody who had the question, Patrick, what EMA is on the chart? Well, it's the 21 EMA, and kind of talk about why I use the 21 EMA here on the 2-minute chart. The 2-minute chart, the reason I use 2-minute chart, it's a little bit cleaner than the 1-minute chart. 2-minute, 1-minute, 3-minute. It's 2 minutes between the 1 and the 3. I think it just makes sense when you think about it. 1 minute, 3 minute, 2 minute. But again, 21 EMA. You can see here on Wednesday, market opens up. We dump. We get far away from that moving average all the way down here to this level. We had some support, I believe. Yes, support down there from Tuesday. So we bounced off the previous low on Tuesday. What is that telling me? What is it helping me do? It's helping me not get short, right? I'm not getting short down here at the bottom. I'm not doing that. That's a bad idea because we just broke a bear flag there off of that EMA. Again, guys, remember, moves in the market, they happen. The moves happen. And then there's consolidation, there's retracement, there's a flag, another flag set up. If there's a trend, if the market is trending, there's a move happening. Well, guess what? There's a very, very high chance that we kind of build another little level, and then we make that move down. If we move from the 950s down there to the 850s, there's a very, very good chance that there's going to be some type of bear flag, some type of continuation move, but we want to wait for that continuation move. We want to wait for that consolidation area to happen before we take a trade, right? We get 100 points from here to here, like, okay, now we're going to wait. But guess what? Look at how far we are away from the 21 EMA. We're pretty far from the fucking 21 EMA. All right, we're pretty far from there. Well, guess what happens? We then get back above the 21 EMA. We bull flag, and then we start to squeeze up. We're riding that 21 EMA up to the high of day. And you can see the move there, 10 o'clock till about 11, just a little over 200 points there to the upside. And then again, 21 EMA. I love this moving average. Obviously, you want to be looking at the higher time frames. You want to have an idea of what the trend is and all this stuff. But again, the 21 EMA helps me identify, like, okay, here's my flag setup. Bang. There's another flag setup. We got 2 flags here, baby. Back-to-back flags. If we push the upside, well, there's a very good chance that we kind of ride that 21 EMA and get that move up here end of a day there on Tuesday last week. So again, look at the chart setup here. This is that big move down at the open. We had a huge move down. This is very kind of like non-typical type move down. But again, you can see even though we made that big move down, we still kind of formed another little flag, right? We had the flag there. We kind of pushed back up into that EMA, and then we started moving down again, but kind of just staying below that 20 EMA for most of that move down. So kind of just breaking it down for you guys. Put it on your charts, test it out, try it, see what it's all about. Most of the platforms out there have free EMAs anyway. I use the EMA over the moving average. You can do more research, find out exactly the difference, but it has to do with the calculation. The exponential moving average is just a little faster. It's a little faster to react to the price action. And for me, the EMA itself is not so much an indicator to get long or to get short. It's an indicator to kind of stop myself and be like, hey, look, we just made a big move down. There's a good chance we're going to consolidate, maybe move back up to that EMA, vice versa. If we make that big move up, there's a good chance we kind of pull back to that 21 EMA. I'm trying to look for like a good setup like that where we pull away from the 21 EMA and then we pull back and then we continue that momentum to the upside there. I can't find it, but in general, you'll see those moves. Market's been kind of choppy and getting those sells recently. Here's a move like overnight. You can see kind of the same idea, right? The market gets too far away from that moving average here overnight. At this point, we're about 100 points away. I would say like the standard deviation's like 100 points, or so, getting away from that moving average before kind of retesting and moving back to that average area where the market would be kind of moving at here. So you really, here's a good example. Perfect. All right. So we get this move up here. We get back above the 21 EMA. We get a little breakout. We get back up in here. Guess what? We get away from that moving average, right? We're about 30, 40 points away from that moving average. And guess what happens? First off, do I want to get long? Do I want to get long right here? Probably not, because I'm like, well, there's a good chance we might kind of pull back. We kind of set up another flag there, and then we get that kind of continuation there end of day. So depending on the time of day and things like that as well, you kind of obviously want to be aware, are we getting close to the end of the day? Is it the open and all that fun stuff? You can see like right here, kind of in the morning, just kind of chopping right there below that 21 EMA, chopping, and then getting that break to the downside off of that 21 EMA area. So sold down there at open, kind of chopped around, and then made that beautiful move down for about 100 points to the downside off of just the 21 EMA. So throw it on the chart, try it out. The 2-minute time frame, it works on every time frame. Put it on the 5-minute chart, put it on the 15-minute chart. Test it out. You can change it, make it a little faster, make it a little slower. You go to the 50 EMA. You can do like the 3-minute chart, do the 13, the 14, the 9 EMA. Just kind of mess with it. You can kind of change the different time frames, the different lengths. So like if I go, let's go to a 9 EMA. You'll see how much this is going to move now. So the moving average is going to move a lot closer, right, to the price action, which it does get a little choppy sometimes, especially when the market's going sideways. That's when you got to be careful. That's why I like the kind of the longer time frame moving averages. Sometimes, like this is the 9 EMA. So it depends on the price action, the way the market's moving. If you go to the 13, this is the 13 now. 13 is not looking too bad either. So depending on kind of your style of trading and what you're looking at, check it out, try it out, test them out. It's the weekend. Get ready. We'll be live all week long, 9:15 a.m. Eastern. And like I said, check out the course. It's $199. Peace to the Middle East.